Hello there, this is FairBinaryOptions.com. It is Saturday the 29th of November, as you can see on the screen, and I would like to make the trading plan for the Euro-US dollar into next week, as it is an important week in the sense that the European Central Bank is coming with the interest rate decision, and we want to know how to position for the event because we'll have end of week expiration date. I am bullish on the Euro-US dollar, and the bullishness comes both from the fundamental point of view and the technical point of view. From fundamental point of view, I'm looking for the central bank not to announce any quantitative easing, at least not this Sunday, not this December. So it's going to be interesting what the comments and the press conference will show. From a technical point of view, I would say that all stays with this 125th level, and the fact that the market now is moving from this 129 towards the 125th into a move that is not an impulsive move. I mean, it is an impulsive move, but it's not an impulsive move in a classical way. This is called an impulsive move, a terminal impulsive move. A terminal impulsive move, on the other hand, is a five-way structure that ends with a contracting triangle, and most of the times it ends with the triangle above the previous lows in this case, or below the previous highs. I would say that our five-way structure goes in the following manner: A, B, C, this to be the first wave to the downside, this to be the first wave to the downside, then to have the second wave all the way here in the form of a flat. This is being called a common flat when the time taken for the B wave is the most, or the B wave is the most time consuming. Then we have a third wave all the way to the downside here, and from this moment on starts the contracting triangle. Remember, in a terminal impulsive move, all moves are corrective, so we're talking about A, B, 1, 2, 3, 4, 5, but all of them actually to be corrective. Here it is a flat, here it is another flat, here most likely is a double zigzag or a double combination between a flat and a zigzag. How about the fourth wave? Well, the fourth wave can only be this one here, either A, B, C, D, E as a triangle on this triangle here, so this to be the fourth wave. And then we should look for a contracting triangle, and the contracting triangle goes in the following manner. It is a special contracting triangle because the B wave is bigger than wave A, and then the market goes and forms, so A, B, C to the downside, or maybe the C wave is down here like this, the D wave, and I would say that this is the E wave that just ended with this move on Friday. Like any triangle, it travels within the B to D trend line and A and C trend line. So this should be the B to D trend line like this. Let's make it of a different color. And this should be the A and C trend line like this. Like this. So all eyes now should stay on the B to D, maybe the B to D trend line is here, on this trend line to be broken, because on a break on the B to D trend line we'll have basically a break of two important levels. First of all, the 125th level, which is important support level here, and it turned into resistance, and secondly the B to D trend line. So on such a move it implies that the fifth wave out of this degree is actually already completed here, and it means that these highs are going to attract. Now this would be alright if we would trade let's say on the spot market, but we are trading binary options, and it means that on the Monday I would like to buy call options on the pair with end of week expiration date heading into the ECB and over the event. So looking to buy call options with end of week expiration date by the time markets are opening on Monday. Thank you very much for being here. This is fairbinaryoptions.com. Call options on the Euro US dollar for next week. Bye bye.